How can that house that famous mouse built keep up this kind of momentum? Let's ask Ari Zoldan, who knows. He joins us from New York. He's the CEO of Quantum Media Group. Ari, good to see you. I like talking about Disney because it's a happy company, the happiest place on earth. What do you make of this set of earnings today? Earnings per share, revenue down, but beating Wall Street expectations by a long way.
Sure. This is, first of all, you're right. Disney is everyone's happy stock. You know, you don't go to Disney World and no one's sad there. So I totally appreciate that. Yeah, look, this was a huge surprise for Wall Street. Disney beat expectation by about 3 cents per share. Revenue is up, and again, you're talking about a company that's $250 billion market cap right now, and quite frankly, I don't see them slowing down at all.
So how, Ari, has Disney turned itself around? Because I remember a couple of years ago, ESPN, their sports network, was in the doldrums. The programs weren't liked. The advertising was down. TV advertising was down on the big network they own, ABC. Have they simply made their company bigger by acquiring the Fox assets and by announcing the streaming service so that you push those problems down, or have those problems gone away?
Well, I think they were focused. Obviously, management is key to everything, and after that, it's the product and understanding the market. And clearly, they got that content is king. Content's going to be king for a long time, and they needed to open up their space more. So, acquiring Fox for $70 billion. Getting into the streaming service business was obviously very smart, and getting ahead of the curve, and that's really the game. I mean, do you remember Blockbuster, right? Blockbuster and Kodak.
Yes.
They completely missed it. You know, they weren't smart enough to be able to see, hey, you know, what does the future look like? And they missed the boat. But Disney is just the opposite. Disney's getting ahead of the curve, and I think they're a great company to follow.
Right. So how smart then, do you think, was buying the Fox television production assets in the United States in order to boost their content provision? Now, they've only just got hold of those studios, so nothing's really happened yet. But how important will it be to stave off Netflix, who turn out about 4 blockbusters a year?
Sure. Well, again, it's not everything, obviously, but Fox has got the talent, they've got the entertainment, they have the skill set. So even from a talent perspective, I think it was a very good move. But then going ahead and double downing on all the different streaming services, like they have a 60% stake in Hulu, which is great, and I think they're going to eat up more of Hulu as well. And you know, if you think about the cable companies, and it's you know, it's a prediction I'm making here, or something that I've shared earlier. In 10 years, cable is going to go away, and everything will be streaming. So it'll be interesting to watch the space.
Okay. Now, Disney Plus, of course, comes online in November. We're told today that Avengers Endgame will be available from December the 12th. It's pretty well priced, isn't it, at $7 a month? Do you think that is that going to be, you know, crucial to its success?
I think so, and I think it's important. I think it's an impulse purchase. You know, I don't think the average person is really going to think about it. At $6.99, it's kind of, sure, let me add to cart and purchase it. Again, as long as the company's pushing out really good, effective, engaging content, people will pay $7 per month. I have no doubt about that.
Can I just ask you about the theme parks, mainly because, of course, China has one in Shanghai, there's one in Hong Kong. I gather Hong Kong's doing pretty well. They've got new attractions. I gather attendance is down in Shanghai because of the kind of general slowdown that's kind of going on there a little bit. How important are theme parks to Disney going forward? Because we all think about taking our children there, but how important to the business, really?
I think it's important. It's their if you want to call it, their brick and mortar business, although it's the largest brick and mortar in the world. Right. But obviously, from a brand perspective, it's very important. It's how Disney started. So I think there's real truth in that story. But I think at the same time, they understand that everything is going online, everything is being streaming, and content is king. So that's where they're headed to.
So finally, then, Ari, a quick investment question for you. Do you think the Disney stock will ever be a growth stock, or is it ever destined to just be a value stock? The highest it ever got was $139.90. And for the longest time after the recession of 10 years ago, it was bumping along around about 112, something like that. I see some people are targeting it at 170. Can it get there?
I think it's a stretch, and it's going to take time. And again, it's going to be the ability to see what's down the road, 2, 3, 4, 5, 6, 7 years down the road. And I think that Disney does have the expertise and the management to be able to get to those points. Again, if we're talking about $170 a share, I don't know, but can I see them coming close to that? 100%.
Okay. Ari, thank you very much indeed. I enjoyed talking about Disney. I enjoyed talking about Disney with you. Thanks very much. Thank you.